Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with a couple of high time frame volume profiles, however, where you can see price hit the white box, which includes 3 value area highs as well as the golden pocket taken from the high to the low. Now, we spent a lot of time in this range previously, and from a range trading's perspective, it is very unlikely price is just going to move to the upside like this, and also from an Elliott Wave perspective, that is very unlikely as we still expect a bigger corrective structure to the downside. However, from a psychology point of view, which is completely not Elliott Waves related, this area of resistance is very obvious, with the golden pocket and the value area highs now creating a wick of about 10 to 11%. What I would like to see, which again is not Elliott Waves related, is this wick being filled, price moving above the golden pocket, move above 50k, increasing the greed over here with the HTF announcement recently as well. People looking for the all-time highs. Psychology number is past 52k, 53k, right? Maybe even 55k, before then returning back into this range. I do believe this range is going to play a very important role in 2024, with the general resistance being between 48k and 52k, and the general support here between 30k and 32.6k. If we go to the daily time frame, then currently this is the highest probability bullish scenario as long as this low is holding. So here we are looking for a 5-wave impulsive structure. 3 is finished, now working on wave 4. The most common target for wave 4 is between the 0.236 and the 0.5, taken from the low of 2 to the high of 3, which is between 41.2k and 35.9k, and the 0.236 is already hit. However, this being the end of a wave 4 would be incredibly short, as usually wave 4 is longer than wave 2 in time, which means wave 4 is then ending after the 1-to-1 fib time, which is taken from the high to the low here to the high of wave 3. Currently ranging on top of the 2 fib time, which is absolutely fine. Preferably, we don't like to see this potential wave 4 going to the 5 fib time over here, sitting on the 1st of February 2024. The target for your wave 5 is up here, and as you can see, it has been hit, which of course fits the bearish scenario coming up later, but the target area, being the 618 up here, is all the way till 53.6k. If price, however, takes this low, it does decrease the probabilities of this particular scenario, and it increases the probabilities of 3 folders that I have over here. The first one being a bullish scenario still, where we are looking for a bigger 5-wave impulsive structure to the upside, where the most common target for this wave 4 is between 43.4k and 37k, taken from the low of 2 to the high of 3, with the invalidation at 34.1k. Preferably, this wave 4 ends after the 0.382 fib time, taken from the high to the low to the high here, comparing wave 2 with wave 4, which is sitting on the 8th of March 2024. The second scenario is a 1-1-2, where we look for an impulsive structure to be finished and a bigger 3-wave move to the downside, where the common target for a wave 2 is between the 05 and the 786, between 37k and 30k, with the 382 being less common at 39.9k and the 886 being rare at 27.6k. In this scenario, preferably price ends after this 382, taken from the low over here to the high, which is sitting on the 27th of February 2024. And of course, the final scenario is that we're then looking for an ABC, and you really want to see impulsive structures to the downside, as then you're going to be looking for prices below 15k. So if we then look at the probabilities of the different scenarios, then the 2 levels that I have on my chart are very important. If price can move to the upside first and hits the 0.618 at 44.8k, it increases the probabilities this move to the downside is a 3-wave structure compared to an impulse, which therefore increases the probabilities for price to take this high sooner or later. However, if price takes the low first, then it is going to be a 50-50 between this bullish scenario here, where we are then looking for a flat in an ABC for then continuation to the upside, or the other scenarios where we look for a bigger 4, a potential 2, or the bearish scenario for much lower prices to come. If price takes the low, it depends on, first of all, the move to the downside, what the probabilities will be for the different scenarios, but especially the move to the upside is going to have a great impact on the probabilities, because in this scenario, right, if we look for a C to the downside, a continuation up, we want to see an impulse to the upside, while for the other scenario here, a big wave 4, potential wave 2, or a wave C to the downside, you're going to be looking for corrective structures to the upside for then continuation to the downside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.